All right, what's up, Camel? Welcome back to the show, man. Last time you were on here was about 6 months ago. I think at that time Bitcoin was around about 65K. We talked about our history with crypto trading and all that kind of stuff. So I feel like it was a great show. So I was definitely touched that you reached back out to do another podcast, man.
Hey, Chris. Yeah, I'm good. Thanks, mate. I'm happy to be here. I can't believe it's been 6 months. It doesn't feel like that long. But yeah, last one was I've done quite a few podcasts and I've hosted a few lives myself and all that kind of thing. But yours had like a very natural flow to it. So yeah, I was super stoked to do it again.
Yeah, well, I definitely think I was very prepared in that one because I had watched your channel for so long. I had a lot of questions lined up, and I re-listened to ours from the 6 months ago to kind of see if I could get a new set of questions left. But dude, I would start off by just saying that like over the last 6 months, I think you were like 15,000, 10,000 subscribers when we did our last show. And I personally just peek behind the curtain. After we did our show, I hit 100 subscribers on YouTube, and that was like a 4-year journey. So I think I reached out to you and was like, bro, like, genuinely appreciate that because like that took a long time to hit. So, and you, I think now are close to 25K on YouTube, right?
I think we are just over 25K, 25.5 maybe, something about 25 and a half.
Heck yeah. So obviously you've stayed consistent. And I got to say, dude, like over the past 6 months or so with crypto, I've kind of switched off just a little bit because I mean, obviously it's been pretty sideways, or it was for a long time up until November. So I know we recently had some price action on the run up, but could you kind of, for people like me who might have been kind of switched off for like the last 6 months and just like in observation mode, um, kind of catch us up on what's been going on since we last talked.
I mean, since what do you know what month it was roughly? If it's 6 months ago,
Yeah, it
it
was
must have
in
been after
June.
summer.
Yeah, it was in June. I know Bitcoin was around 65K. It went sideways for about 3 to 4 months, and then around November is when we started seeing like a huge upward price action, new all-time highs, and now we're kind of waiting to see what happens next.
Yeah, we spent a lot longer than I was anticipating in that kind of sideways range. I think we were somewhere around 7 months between first putting in a high of 73K and then breaking that range in November, like you said. Uh, it's been pretty much up only since then, right? And I know that a lot of people are overexposed to the altcoin market. And I know a lot of people kind of got in slightly later in the cycle and they've probably had a little bit of a tough time with the volatility. But as you probably know, I'm mostly just a Bitcoin guy, and Bitcoin has been trading pretty nicely, I think. So, from my perspective, it's going in the right direction. It hasn't done what I feared it might do, which is top pre-November of last year and qualify it as a left translated cycle. We can happily invalidate that now, and then head out towards what I hope will be a big right translated cycle. So far, so good. There is a weekly cycle low due sometime in the next daily cycle. So that would put us out to about March if it's to occur early March. So we might have to be open to one more bit of downside into that early March timeframe. But equally, it could certainly pump from here and then have that shakeout later, maybe late February. So I mean, happy days as far as I can tell, right? As far as I can tell, we're heading towards the new president and the government switch in America. This is going to be the first time ever we've had a pro Bitcoin government. And that may
Right.
turn out to be a nothing burger. It may turn out to be a sell the news event, but we seem to be heading in the right direction. And if all the stars can just align quite nicely, then we might have a real chance here at seeing something very special.
Absolutely. So I definitely think that's something I wanted to touch on is last time we talked about the left translated cycle, and you were the first person that introduced me to that concept. So if anybody who's listening didn't know what that was, it just means that the top for Bitcoin would come before the halving instead of after the halving. And I think I said it right that time because last time on the podcast, did I
Before the
do it wrong
halfway
again?
point. Yeah, before the halfway point of the 4-year cycle.
Oh, not before the halving. Yes, the halfway point. There we go.
Yeah.
All right. It takes me 3 times usually, so by the third time I explain it, I'll figure it out. But no, I understand the concept again, just like explaining it. So yeah, the halfway point. So at what point did you know that it was officially invalidated?
Well, when we got past that halfway point, which is around November, then it was easy to say, okay, so long as we print a new high, then it can't be left translated. So yeah, it's pretty much as simple as that. All translation is an observation of where the top forms relative to the halfway point. And what we typically see from cycles is if you chain together 4 cycles, they tend to, in a bullish cycle, do 3 right translated, and then the 4th one will left translate. And if the 4th one does, the 5th one tends to. So that was the whole premise. We'd already seen 3 right translated cycles for Bitcoin. And therefore, I was thinking on the balance of probabilities, we should probably expect a left translation in the 4th cycle. That's just typically how we tend to see it play out. I'm happy to say it hasn't happened. So yeah, we could invalidate that as of November. I think something that's worth noting is if this cycle continues to play the way it is, and it does heavily right translate, then we have to put the left translation back on the table for the next 4-year cycle, which people are probably not going to be super happy about that. But it actually becomes even more probable in the next cycle. So, so yeah, I mean, that's pretty much all there is to it. It's just if the peak forms early to the halfway point to the left-hand side, then we qualify it as left translated, and it implies a further and more drawn out bear market in terms of time, because if the top has come earlier in the cycle, then the rest of that time has to be spent declining into a bear market low, or a 4-year cycle low in the case of Bitcoin. So yeah, I mean, so far, I did consistently say all along I was hoping to be invalidated on it because it's much easier to deal with a right translated cycle. And we also, if the bull market is going to go on for longer, then we should, in theory, get a higher top price, because the longer it runs, the higher it should go. So I'm kind of happy with that.
Go ahead.
I was going to say I'm kind of happy with that. One thing that left translated, even though it was proven invalidated and wrong, one thing it did really well at, it was calling the all-time high pre-halving. So it was kind of like we got that right for the wrong reason, which is kind of like a strange way to do it. But I mean, at the end of the day, it's not about being right or wrong for me. It's about staying on the right side. So we were able to stay on the right side of that. And like I said a bit earlier on, I think now we can just focus on hoping that this thing continues to blast off through the rest of this year.
Correct. So I guess like saying that if we had seen a top of 73K in March and that was the actual top of Bitcoin and we just saw downside action from there, that would have been a left translated cycle, correct?
Yeah, that's right. Yeah.
Oh, yeah. Okay. So once we broke above that again, after the midway point of the cycle, then it became right translated at that point. And obviously we've had much higher highs since then. I mean, I will tell you that just looking at like the zoomed out version of a Bitcoin chart and seeing how straight up it is right now, I personally feel better if we have a little bit of downside and sideways action before the next run up, just because when it starts going straight up, like it kind of has been since like November or so, it's a scary feeling because like you just feel like you're on the side of a cliff basically. And additionally, I know that, like we said, if it's right translated, I remember us like talking about this and hearing it on your channel, is it's going to be way easier. And I do think it is easier, but now that we're here, it doesn't feel quite as easy as I expected it to. I'll say that.
Yeah, well, there's nothing easy about it, right? In trading and investing, it's never easy. It's just some scenarios are slightly easier to deal with than others. But with an asset as volatile as Bitcoin, and people tend to go quite all into these types of assets, which means the swings are quite correlated to one's net worth oftentimes, then yeah, it's no easy ball to ride, because it's not like a stock where it's going to slowly climb and it may, if you're really lucky, go up 200%. You know, there's potential 1,000% plus in these crypto space type moves. And yeah, when you've got a big position on, or at least big relative to your net worth, like it's no easy feat. It's much easier to say you're going to sit there, hold it, and then sell the top. But in reality, all bull markets throw nasty and violent corrections to try to shake you off. And you never really know which one is the one that you should have gotten out at. So all we can really do is, well, I use trend lines, as you know, and I use them in increasingly steep angles. That's worked historically well for me. Doesn't mean it's guaranteed to work in the future, of course, but historically it's worked pretty well. And all you can really do is just try and sit on and stay on it as long as possible. The cycles are quite powerful. If we do end up doing a normal right translated cycle, then that puts us somewhere around October, November for the top. So if we can get all the way up there without having been bucked off the trend or panic sold or seen an early top come in, then any breakdown October, November is to be respected. And we could say with a very high degree of confidence that that will be the top for the cycle. But the challenge is, what if it does that a couple of months early? Then you kind of got to deal with that in real time. and sometimes it's easier to identify than others and that kind of thing. So as I always say, man, one day at a time, and we'll see what the market can give.
I get that. Yeah. What I'm thinking is like, if I just looked at the previous tops and was like, okay, I have 20K as a previous top, okay, and then or whatever if exactly it was, and then last cycle we had 69K as the official top, and then just recently we hit about 108K. All right, so just thinking about that from that perspective, if the top had already come in, I wouldn't be super, super surprised. I'd be like, okay, yeah, that was a weird cycle. And everything about this one has felt a little bit different just because we had the early top before the halving, like you said. And it was way more of a run up. Like sometimes you get that run up, 12K, and then like you drop back down to 9 or 10. And then like we see a huge move up again from there. But to go all the way up to 70K, back to around like 50, 60 something. And then again, now we're already at 100. And it still feels either like we're topping now or it's really still early. So that's kind of the weird situation that I feel like is happening right now, at least in my mind.
Yeah, it's super difficult to gauge. One of the things I think that makes it extra challenging is the numbers never really seem to make sense, right? When it was trading at 1,000 before that run up to 20K ish, no one believed 20K was on the table, right? No one like sincerely believed that at the time it was trading at 1,000. In fact, the first time it hit 1,000, most people couldn't believe it. They were like, nobody really thought it could do that. And then, next thing you know, it's at 20K, bear market back to 3K ish. And at 3K, everyone kind of went the other way. Everyone was 100% sure of themselves that 300K was coming that cycle. And then it didn't. It
Right.
stopped really short at 69K. And now we seem to have kind of reverted back to this whole bull market. I've seen people doubting it the whole way up. It has even made me question it a handful of times. I know this cycle, like you said, is different because we had an all-time high pre-halving. It's also different because we've got true spot Bitcoin ETFs that are seeing huge inflows. And it's also a little bit different because this cycle, even though a lot of people think this cycle has been more challenging to deal with, it hasn't thrown the type of corrections that prior cycles did. The prior cycles threw 30, 40, even 50% corrections along the way. And they just did that routinely. But the biggest one we've had is 33% from that 73K low down to 49K. And the rest of them about 22% on average. So that's actually surprisingly low volatility for a shakeout in Bitcoin, especially if you compare that to the prior cycles. So I actually think this one's been easier to deal with than the prior ones. But again,
I agree.
easier is a relative term, right? Like it's never easy when you're watching your net worth swing up and down and all this kind of thing. But yeah, I think so far so good.
Right. And I agree with what you're saying is that like last cycle, I remember much more of an emotional roller coaster because you see that number go up and down so violently on your account. And this time I don't know if it's just me. Like, I mean, that's kind of the reason I stopped paying as much attention recently because I was like, look, I'm just holding and I don't need to pay attention to everything necessarily that's happening because I mean, the less I try, like it seems like, or try to like make moves and trade around. Like last time I traded around so much and I was like, dude, I would have done so better if I just left everything alone. So this time I've tried to go with that approach and I've made a few moves here and there, but yeah, it's like I'm trying to do way less this time and just let things play out. But I mean, my portfolio is probably down 20 to 30% just on my crypto side from, a couple weeks ago. And maybe 4 years ago, I would have taken that a lot differently than I am right now, just because I'm that more of a long-term mindset now. But yeah, I'm just kind of like waiting to see, but it does, at least for me, feel like that altcoins seem to not have done a lot so far. And that feels a little bit different for some reason to me. And maybe it's just perspective. And there's some coins I have, like if you bought Solana at $7 and you're sitting at 200, you're like, okay, yeah, like they've done a lot already.
Yeah.
But I guess either it's being greedy or spoiled that you think like a 5 to 10x is not doing that much in a year or two. I guess is that's what I would gather from my own thoughts right now.
Yeah, I definitely think managing expectations is important. I mean, I'm from a stock trading background before I got into crypto and Bitcoin. And 30 to 50% was like a really, really, really good return. And if I could
Mhm.
occasionally hit a 100% return, I was like hopping and skipping and jumping, right? so,
Exactly.
so yeah, it seems weird now that like a lot of people don't get out of bed for less than like 3 to 5x. I do think a lot of people don't really realize how spoiled they are, but the flip side of that is we are, as crypto people, accepting way more risk, right? Way more unknowns, way more uncertainties. There's hacking risks and rug pull risks and all of this other stuff. So yeah, the risk and the reward is kind of balanced there. It's a lot higher risk, a lot higher reward. But ultimately, I think so long as you're not too greedy and so long as you have managed expectations, then it shouldn't be too bad. But I do think I definitely see it on Twitter from time to time where people are posting targets for altcoins and they clearly haven't taken the market cap into consideration.
Hmm.
Um, I saw one the other day that was it would have translated to something like a 12 quadrillion market cap. If
Yeah.
you do the maths, and I'm like, they obviously haven't thought this through. They're just kind of moon posting these targets or whatever. And if you do that, then you're probably going to be massively disappointed because you're going to be aiming so much higher than where is a realistic target that when that target hits, you're not even going to be considering taking some off. And that's kind of how you end up getting in this round trip position. Like we saw last cycle, right? Everyone was aiming
Mhm.
at 300K, 69K comes and goes. Everyone's still aiming at 300K. Next thing you know, we're 40, then 30, and then 25. And then all of a
Mhm.
sudden people go, oh no, like maybe 300's not coming this cycle, right? So yeah, I think if you can manage your expectations and take some profit along the way, you'll do just fine.
I have a running joke with a friend. We haven't talked about it in a minute, but he sent me a video from your favorite trader, Gareth Soloway. But that was whenever Bitcoin was at 60 something K, maybe 50. And he sent me that video where he called the 19K. And I was like, absolutely no way. There's no way. Like, I thought I was way too smart. I was like, there's no way that's going to happen. Like, I was so delusional. And then it came true. And I was like, man, if I just listened to you, I would have been saved so much money. But yeah, it's like the funny thing was that to me is the problem when somebody gives you an opinion and you can't even be bothered to listen to it or watch it. Like, I watch so much crypto content. Why couldn't I go listen to one contrarian video in that whole like year and a half or 2 years? You know what I mean?
Yeah, yeah. But it's emotions, man. Like emotions are, it's easy to say you're not going to get emotional, you're not going to panic at the lows. It's easy to say you're not going to get greedy and you'll take profit when you're early in the cycle, right? But we all do it. Like Bitcoin starts creeping up, you start shopping for cars, bigger houses, whatever you're into, right? We all kind
Hmm.
of do it. And it's really important to be able to check yourself and kind of, but I mean, it takes a couple of cycles or at least one cycle usually to learn that, especially if you're brand new. If you come from like a, stock trading background or commodity background before, then you've probably already learned these lessons elsewhere. But particularly, I think a lot of people show up to crypto having no prior experience in trading or investing. And yeah, it's a wild ride, right? It's a lot of volatility to handle. And it kind of doesn't make sense to show up here either. It makes, in my opinion, better sense to learn the basics somewhere that's not hyper volatile like crypto, because the more volatility, the harder it is, right? The harder it is to manage risk, the harder it is to manage your emotions and all of this kind of thing. So a lot of people just, I don't even think they realize it, but they throw themselves in the deep end by building an altcoin portfolio and
Hmm.
only trading crypto with no prior experience, right? That's like super, super difficult to do, even for an experienced stock trader or commodity trader. But I mean, at the same time, again, it goes back to what we were saying that a lot of people don't get out of bed for like less than 3 to 5x anymore. And if you don't get out of bed for less than 5x, then the S&P 500 is not going to be interesting to you at all, right?
Correct. I think from altcoin perspective I know that that's not your space. I would just say that it doesn't seem like there's been much euphoria really lately, or through the whole cycle. Like there's been a couple pumps for. So I have this one called Super Farm, or Superverse is what it's called now, and I was buying it probably 11 to 15 cents on average. And I remember when it hit about 40, it was just going straight up, and I just took profits off that. I sold a lot of my position, and then now it's sitting. I think it went up to like 227, and that was the moment. That's like the euphoria moment where I was like, I was going to show my wife and be like, dude, look how much Like I was like gonna be like, look how much this is worth, or look how much this is up. That was the moment on a Sunday. I remember it was probably 3, 4 weeks ago. And I was like, okay, this is that moment where you think you should sell. And I was like, no, it's way early. Let's just hold and see what happens. And I chose not to show her because I was like, if I show her, then that means I'm gonna sell. So I was like, let's just hold it and see, like let it go, because I think it's gonna go way higher this cycle. And then now it's gone back like to down to like 120 something now. So it's crazy how much the volatility is. But I guess like I haven't seen those huge, like there's only been a handful of 10, 20, I guess 20 to 30 to 50% days, like those haven't come around that often. So hopefully that tells me we're early. But I wanted to kind of ask your opinion on that, because you're way more plugged into the space than I am. And in my perspective, the only thing that I'm saying that seeing that signals that it's becoming more mainstream and closer to the end of the cycle is that a lot of people have been asking me about, hey, do you still own your Bitcoin? Because they've heard me talk about it for 4 years or so now. And that's kind of the only thing people are like, hey, you need to talk to Chris if you want to get into this crypto stuff. So that I'm like, all right, that's a little bit of a red flag, but that's the only thing that I know of. So do you seem like feel like we're in any kind of frenzy at this point yet, or is it still way earlier than that?
Well, I've noticed that frenzy has come on in waves. Like definitely when we made the all-time high pre-halving this cycle and then moved up towards 73K, there
Hmm.
was a lot of clearly new people showing up in the comment section of my channel. Although I didn't experience any personally, I had lots of people reach out to me and tell me that their aunts and uncles and whatever had been asking them and texting them about crypto, and is it now a good time to buy? And then that kind of fizzled out during that 7 month consolidation thereafter. And it wasn't until Bitcoin was, I don't know if it had broke 100K or if it was coming up to 100K for the first time. But then I got my first text or phone call actually from an uncle in the pub, and he was saying that he was telling some people in the pub that I've done well on Bitcoin or whatever, and they wanted to know what coins to buy and if now was a good time and all of this kind of thing. And I took that as a bit of an ominous sign. But
Hmm.
I don't think we have reached insane amounts of euphoria yet or anywhere near that. But the other thing is, I don't think we need to. I think a misconception in this space is that all major tops form on euphoria, and actually, as far as I can tell, that's not the case. In fact, I think most of the tops I've experienced are quite sneaky. It just looks like an uptrend, and then it stops trending up and it reverses. And we should really hope for a parabolic, big near vertical blow off top that's full of euphoria and full of, and backed by an internet of people posting screenshots of profit every day. That makes it easier to identify. And if it's going vertical, then it's going to crash spectacularly at some point thereafter. But I've seen an awful lot of assets top without any euphoria at all. They just kind of staircase their way up and then they reverse. And that's it. And I think it is a bit of a misconception that we have to have euphoria to see a top. With that said, I could very much imagine we will build more euphoria than we've got now in the crypto space. As for altcoins and their lack of performance, it was always kind of an expectation of mine that most of them wouldn't do that well this cycle.
Mm.
And my idea for that is just like what we saw in the dot-com bubble. We saw like pets.com is the example I always go to. It reached an insane valuation, had a big parabolic blow off top, and you couldn't buy a bag of dog food from pets.com, right? It had nothing. It was just an idea, just a pipe dream. And then afterwards, everything comes tumbling down in the dot-com bubble. People were still trying to trade these stocks and hoping for a recovery play for many, many years to come. And some did for sure, right? We got the likes of Google and, other big companies come out of that. And they obviously went on to do very, very well. And same for likes of Amazon. But the reality is most of them didn't, right? Most people just ended up buying a bag of stuff and hoping it would recover, and it never did, because ultimately it was pets.com, right? It didn't do anything apart from have a website domain. And so my idea is kind of that we might be seeing a similar setup here, where 2017 was akin to the dot-com bubble in terms of the altcoin market. So in 2017, absolutely anything you bought went straight to the moon. And then since then, sure, there's been a handful of things that have been your Googles and your Amazons that have done well in the altcoin space, but the majority of them have massively lost value against Bitcoin. the majority of them have experienced lots of token inflation and this kind of thing, making it even harder from a market cap perspective to take out their highs. And so, I mean, I could easily be wrong about this, but there's also like 4 million altcoins now, right? Like
Mhm.
an insane amount. So there's just not enough money in the world to pump all of them. So I wouldn't be surprised if we don't see all of them go. But with that said, if Bitcoin is going to continue to run and is going to do very, very well and is going to have that heavily right translated cycle, then it makes sense at some point later in the year, we would see the people that have nice big Bitcoin positions probably exit some and rotate into alts. But I still can't get away from the fact that I don't think we're going to get a very broad based alt season. I could easily be wrong about that, but I've been saying over and over again, I think you'll see a handful do extremely well, and we won't see most of them do very well. And that's kind of exactly what we've seen in the stock indexes over the past couple of years, right? We've had the Mag 7 carry the entire index on their back. Just these 7 stocks have done insane
Mhm.
numbers, like
Yeah.
Nvidia and Meta and Tesla of late, and this kind of thing. And then if you look at the underlying sort of index and most of the stocks inside of there, they're just not doing anything. And so a lot of people always kind of are quick to come at me and say, well, look at this total two chart, or look at this total 3 chart. You know, this has got a big target up here and some absurdly high number. But the thing for me that's a little bit concerning is we could easily see those targets hit on the altcoin indexes if you just get 3 or 4 coins that are in those indexes do 50, 100, 200x, right? And then the rest don't have to do anything and we can still hit the major index targets. So I do wonder if that's what's coming. But I'm pretty sure the people that have invested in like the top 10 or the top 20 or the top 50 will probably do okay. But I think the harsh reality that people don't want to admit, because especially of late, altcoins got a little pop not too long ago. Many of them did like 300-400% overnight, pretty much, or within a couple of weeks. And people were very quick to come out and say, like, oh, look, I told you so. Alt season started. I'm up 300% on this coin. But then if you price that same coin against Bitcoin, it's still no way near, outperforming Bitcoin. And if you look at it relative to its prior high, it's still nowhere close to its 2021 peak. So I think yes, if you bought the lows recently, then you probably could be in good stead. And if you've held them for a long time and you've got low entry, then again you might be in good stead. But generally speaking, I don't see the kind of strength, broadly speaking, across the altcoin market. Not that I follow it very closely, mind, because as you know, I'm mostly Bitcoin
Mhm.
biased.
Right.
But I don't see, for now at least, the strength there. But of course, as I said, if we do get a heavily right translated cycle, it would make sense to me that a good handful of these do very, very well.
I've definitely, I don't know if I get like this every cycle at some point, and it seems like there's whenever Bitcoin runs, I guess it's more just the FOMO too, but I've definitely had that mindset a lot more lately where I'm thinking like, okay, dude, like you've bought all these altcoins just waiting for them to go, parabolic. Meanwhile, you have an asset that you can just simply explain the economics of and the demand reason for to anyone. With altcoins, I don't know of any altcoin I can explain them somewhat, but I mean, I know like 1 to 2% of actually what the thing is going to do or how to explain it. With Bitcoin, there's a lot of I can't explain, but when you look at the value of the U.S. dollar, everybody understands that. Like it's very easy to get the demand driver of Bitcoin. And I'm like, dude, you have an asset that's, 20 to 100K over the past couple of years. Like, what do you want? Just buy that. Like, that's what I'm starting to get that mindset way more, that stop trying to hit all these big plays or just throw in $100 or $200 on altcoins and start stacking. Like maybe they'll hit one day, but I think like there's a patience aspect there with that. And I mean, like you said, it doesn't feel like we've heated up that much. Like compared to 2021 times, it felt like every weekend just the charts were just going off. And I was like, dude, this is crazy. 2, 3, 4x on a weekend, on one coin, and you just see like it get hot. And then that hasn't seemed to happen just yet. Granted, we still have time, but it seemed like it was happening a little bit more, or it's just around the corner. But with Bitcoin, like it's one of those things where I feel stupid now not putting more low, I guess, investments into it and just letting them accumulate over time, because I got into the trap of like either trying to get into too many altcoins or wanting to have more money at once to buy Bitcoin with because of the value of it. Whereas you can still buy $200 worth of Bitcoin or $10 or whatever it is, and then you look back over a year, and then all of a sudden you have a few $1,000s, here and there. But that's kind of how I did with my portfolio for crypto. Now is I started it back after 2022, I think, and I almost think I like started it from scratch almost, um, where I just started with 10 to $50 investments, and now it's way above that. But yeah, like I don't know that my altcoins, I could have outperformed my portfolio possibly just by putting everything that I put into Bitcoin at this time, which is the whole appeal of altcoins, is to outperform Bitcoin, right?
Yeah, yeah. But I think I mean, it could go either way, right? We could easily see these altcoins start to wake up and come alive, and maybe we've just gotten to this kind of peak despair phase in the altcoin market. So you can never really count them out. But I do think, in terms of like stress management, it's probably a lot easier just to buy Bitcoin and do nothing.
Yeah.
Right. And yeah, you have to kind of accept that you're probably not going to get 1,000x or even 100x. But at the same time, if you get, I mean, what are we up at the moment? Something like 500%, maybe more than that.
Yeah. I mean,
It's got to
since
be about 500 or 600% already. And if we can go to, let's say, 200K, which doesn't seem super insane to me, then obviously we get double that return. And I mean, that's not to be sneezed at, in my humble opinion, not by a long way, especially if you can take some profit somewhere close to the top and reallocate it somewhere close to the 4-year cycle low. Then you could quite easily take all those gains and then, double, triple, quadruple your stack just by taking some profit, paying some tax, and buying the 4-year cycle low again.
Mhm.
And to me, that seems like a much surer bet than trying to pick a handful of altcoins out of the 4 million odd that are created and hoping that you outperform the space. But I also think that a lot of people perhaps don't have enough wealth to kind of, I think a lot of people, to put it frankly, are buying lottery tickets.
Right.
I really think that's what I observe. They don't have very much money and they're like, well, I don't want to buy Bitcoin because, if I've got $100 to invest and I buy Bitcoin, even if it does a 10x, I'm still not going to be rich. But they know that if they put that in the right meme coin, then they could potentially be a millionaire. And I think a lot of these people are chasing that kind of lottery ticket, escape the matrix type, hit one
Mhm.
trade and retire type of investment. But the reality is, very few people actually succeed at that. And you are probably way better off taking your time, going slow, and accumulating as much Bitcoin as possible. But I mean, I hope it works out for them. I hope I'm dead wrong. I really do. Because I know how hard it is to kind of escape the matrix, for lack of a better term.
Mhm.
So, I mean, I really hope I'm wrong about the whole, thin breadth on alt season and just a handful of them doing well, like we saw with Mag 7 stocks. I really, really hope I'm wrong about that. But so far, it doesn't look like I am. So, but it could be early, right? Maybe it's just way too early. And I mean, traditionally, true alt season is complete in like 8 weeks, right, after Bitcoin tops. So
Mm.
maybe they're just not going to do anything for ages, and then Bitcoin finally puts in its top, and then we get this like 2-month period of just insane 1,000x here, 500x here. You know what I mean? Like maybe that is coming, but just not for a good handful of months.
Yeah, I definitely think I have to be patient because I agree. Like I think I've done a lot of lottery ticketing, and my idea on that was just looking back at how low certain things were before the 2020 cycle. And I'm like, man, if I had just been buying during the bear market, then altcoins, like just wait. And again, like I still think the returns that I've been getting are good with like, there's several I have that are 5 to 10x where they were, and the other ones that haven't moved are just so far down on the list that they just don't have that much market cap, or the ripple effect has not hit them, which, there's different tiers obviously of coins. But yeah, so I think but if you're sitting on 2 to 5 to 10x, like what's there to complain about? Like enjoy your gains, like you're sitting in a good spot, and just be patient. And so what I've tried to do is spread that risk out over, several, 10 to 20 different things, just to see what hits, or wait to see how it goes. But I do hope that we get like an extended, like you said, till about September, October, November, if there is continued upward price action for there. Even if I mean, at this point, too, if the bull market stopped here, I would still just, keep holding probably most of my positions till the next one, which I didn't even think it that far ahead. And when you said the next 4-year cycle, I wasn't even sure there would be another 4-year cycle. Because I guess I wasn't thinking that far ahead, because I know you mentioned that. But yeah, I'm gonna be patient and let things kind of play out with the altcoin market. But I've already seen plenty of gains on some of them. I'm just kind of at this point waiting for those crazy days that have just not come yet. But I do think I need to think longer term into the future and think, just for example, I had a friend that he wanted to buy Bitcoin this past bear market. And I think we were watching it as it went from like 50K down to about like 15 and 20 something. And we were considering for him, like, hey, look, I can tell you, I think it's a decent time to buy. I think I've mentioned that a couple times to him, and was just like, look, just be aware it could still drop 50% from here. Like, you could lose half your money before you make it back. So I just want you to be prepared for that. And I need to check in with him, because I'm still not sure if he ever bought, but he had that mindset or mentality where he was like, I want to buy, and I'm trying to just go in on Bitcoin. And I hopefully he did. But yeah, that was the whole plan. Is we were trying to time the bottom so well, but it's just funny to look back at, because you sit there and you look at 20K or 26, and now that you're like, man, that would have been so amazing to buy at that point. I think that's when I started getting back into Bitcoin, was 26, and just thinking like, man, like, who cares if it's 20, 25, 30, or 15? Like, it really didn't matter that much. Obviously you care if it drops back down to 15, but just looking back now that we're at 100, I just don't think I was even thinking that far into the future and that we'd even hit this amount. And now that we're here, it just looks silly to not have been going all in on Bitcoin at that point, you know?
Yeah, for sure, for sure. But I mean, the whole thing's a learning curve, right? It takes a lot of time and experience and dedication, and yeah, you can't expect to get things right all the time, or even that often, really, I guess. Um, but it seems like we're in a good spot. I'm pretty optimistic about where we are at the moment.
I think looking back, like I say that, and I think a larger point was to say that now we're at 100K or close to it, and I think in a few years we'll look back and be like, dude, we should have been buying as much as we could get our hands on at 100K. And I mean, that's wishful thinking, obviously, but it's all just adjusting to the levels that things are at. And then, like you said, it's when it's, 200, 300 potentially in the future, we'll be looking at 100, like, man, like, why are we so scared to buy then? Like, just keep buying. And I think that's the mindset of just stacking and thinking long term. But yeah, I want to kind of pivot real quick, and ask you kind of, I've been purchasing a bit more miners. I guess that's like more of a lottery ticket style as well, just because I thought a Bitcoin mining stock could potentially have a higher ROI than just buying Bitcoin by itself. And I've been stacking those for around a year or so, but they don't seem like they've had much price action over the past year. Like, they've seen some highs, but then they quickly return back to where they are. Do you have any insight on mining and like why those haven't seemed to move as much, or do you think it's similar to altcoins where it's just that we're still a little bit early?
Um, Funny enough, I made a video about this um, last week, maybe, and sometime in the last 2 weeks. I made a video about this, and what I did was I overlaid all of the Bitcoin miners and crypto stocks over the Bitcoin price chart, and then we looked at the performance from Bitcoin's 4-year cycle low to date. We shuffled the dates around a bit to kind of squeeze as much performance as we could, and then we compared that to the prior cycle. And what I found was what you just said is very very common in my experience. A lot of people seem to agree that these miners have underperformed and that they've kind of been lagging, and we were hoping they would have done better by now. But based on the analysis I showed on my channel, the majority of them are actually outperforming Bitcoin if you measure it from their ultimate low just after Bitcoin's 4-year cycle low.
Wow.
And when you go back and compare that to the prior cycle, as we did in the prior cycle, it was only really Marathon and Riot that outperformed Bitcoin. The rest of them did very good numbers, but they didn't outperform Bitcoin in the prior cycle. And so it was really interesting because I wasn't expecting to find that. And even though in the member section, we actively trade those miners, and I've been telling people over and over again, manage your expectations. We can't expect all of them to do a 30x off the lows like MicroStrategy did. But even though I was saying that, I was still kind of in the back of my mind thinking, well, it would have been nice if 1 or 2 more of these had have squeezed up more than they did. But like I said, when I actually did that comparative analysis, we're actually, broadly speaking, outperforming Bitcoin based on, if you start the analysis from the ultimate cycle low over the last, 2 years ago, the end of 2022. So again, I think it probably speaks to managing expectations, because I understand if you got in the last 6 months or the last year, the performance is probably pretty lackluster.
Mm-hmm.
But again, if you measure it just from the cycle low to date, then most of them are outperforming Bitcoin. And even the ones that aren't have done 2-3x at least, which, is a decade's worth of S&P 500 returns. So, I mean, I don't think they're that bad. And I did make the case in that video at the end that so long as Bitcoin doesn't just roll over and die from here, then there probably is scope to see outperformance further upside across the board in those crypto stocks. So, I think most of this is managing expectations and timing, right? Like it's if you buy the absolute top, then it's probably going to be kind of hard to sit through for a while. But if you use those 4-year cycle lows and add these sort of positions as longer term position trades, then like I said, so far so good.
Yeah, it's like you would think the common sense mentality with the miners. I guess that's what I thought is, if you're buying miners and Riot's at $14 and Bitcoin is at 25,000, I'm not sure if that tracks accurately, but I'm pretty sure it was somewhere around there. It's like if Bitcoin's around 25, 30K, Riot's at $14 a share, maybe even 10. You would think if Bitcoin hits 100K, Riot is going to be more valuable, but it's really not been like that, which I think has just been the weird thing to figure out. You're like, what am I missing here?
Yeah, but I think they don't move one to one.
Right.
If Bitcoin goes up, that doesn't mean Mara has to go up or MicroStrategy has to go up or whatever. They can diverge for short periods of time. But if you'd have bought both of them at the 4-year cycle low, if you'd have bought Mara and Bitcoin, then Mara, I think, has outperformed. So at least I can't remember exactly which one. There was 2 that had underperformed. I think Riot had underperformed and maybe Bitfarms. Don't quote me on that. It's in the video. But all of the rest of them have done better than Bitcoin. And MicroStrategy did something like a 30x, right? So that's a lot more than Bitcoin did. So yeah, I think it just depends all on the timing. And it's kind of challenging because, if you were to measure it over the past 6 months, then you'll maybe find most of them are underperforming Bitcoin. But that is maybe to be expected since they were overperforming earlier on in the cycle. So maybe it's just a case of, weathering the storm, letting Bitcoin move higher. Once Bitcoin moves higher, it will signal to everyone that the bull market is intact and we're still going up. And then people will naturally tend to think, oh, better grab some more Mara, Wolf, whatever the miner is, right? And then that will probably see the squeeze. And so I think you'll probably see this kind of like ebb and flow between Bitcoin and the crypto stocks. But I do, largely speaking, expect most of them to continue higher. And I probably think most people are not really bullish enough on them.
I think what I'm going to do is continue to be patient, like you said. And I remember from last cycle, they had basically small run ups like they've been doing. It's like, they run up 50%, drop back down 50%. And then all of a sudden in a month, when the euphoria comes, you see like a 2 to 3, 4, 5x, depending on which one it is. And that's kind of like a top signal looking back, because they just all, move like a GameStop. And then that's like that market euphoria. So that's kind of like another just public top signal. If you see that, like if you see Riot 50, 60, 70, $80, like that's probably about the Bitcoin top potentially. And again, don't quote me on that. It's just saying like, that's kind of what I remember happening last time. It was whenever the first top came for Bitcoin and it hit 60K. I think Riot hit $80 in like a week or two. and it went from like, 10 or 20 to 80, and then it never hit anywhere close to that again. And it's all because there was more euphoria, I think, at the 64K than the 69K, like you had said, where it was a staircase up, and then no one believed that was the top.
Yeah.
I do think there is much more euphoria around MicroStrategy. I've seen some people that are just all in on MicroStrategy, that type of thing, and it's becoming more of I don't know, like an iconic stock. It's not the word I'm looking for, but it's just like a cult of MicroStrategy, I guess. It seems like what's happening. Uh, what I know you had a video recently where you were saying something about a lot of MicroStrategy's Bitcoin is purchased on loan, I guess, which might not be the right way to say it. But you were saying that there is a potential possibly where they might have to sell some of their Bitcoin to pay back that loan. Could you? I'm sorry if I butchered that, but could you kind of educate me on what's going on there and anyone else who's listening?
Yeah, I'm by no means an expert in this. I'm like a
Yeah.
technical trader only, so I don't really pay attention to the fundamentals. But as far as I understand it, they have issued something called convertible notes or convertible bonds,
Hmm.
which are 0% interest, and there is no margin call for that since there's no margin. So I believe how this works is people give them money in exchange for one of these bonds, and then the idea is the bond is like a 5-year period, I think, or something like that. And if at some point they decide they want out, then they can redeem it for either cash or equity, cash or shares, right? So they can't, in theory, be forced to be margin called or anything like that. They, in theory, might not have to sell the Bitcoin, I don't think. But the issue is, if a true top comes in for the share price of MicroStrategy and it starts to tank, these investors these bondholders might get a bit jittery. And if they do, then they can come knocking for Saylor and say,
Hmm.
hey, I want to redeem this note. I don't want to hold this anymore. I'm not interested. And if they do that, then he has to either offer them the value of the note in cash or in shares, as far as I understand. Again, I'm not an expert in this. But if he doesn't have the cash, because obviously every time he gets cash, the first thing he does with it is buy Bitcoin,
Right.
right? Then the only other thing he could really do is offer them equity or shares. And then this could be either dilutive or force more downward pressure on the shares, because presumably if the share price is already fallen and you give the shares to the bondholders or the note holders, they're just going to dump the equity and try to free the cash, which the case I've been making is we could see a very, very quick and rapid and nasty decline in the share price of MicroStrategy if this kind of thing is to occur.
Hmm.
So I also found a clip of Michael Saylor who was saying like, yeah, if that happens, we'll just dump the equity, right? We'll just sell the equity. So I was like, well, there you go, right? Like if they're going to sell the equity in size, then you can expect the share price to crash massively. Now,
Yes, I
for
remember
me,
seeing that. Go ahead.
yeah, for me, I still think realistically, the next major opportunity is that 4-year cycle low, not only for Bitcoin, but for MicroStrategy. And again, if you can just kind of sit patiently on the sides, I mean, by all means, have a position. If you've got a position already, whatever, continue to ride it. But for me, as long as MicroStrategy doesn't blow up and doesn't go to zero, then it should trade a 4-year cycle low late 2026. And that for me is where I'm interested in getting back in, because I did really well at getting hold of MicroStrategy very early on. And then I recently sold it at around that 500. It printed a high of 540, and I think I was out just below 500. I think. Don't quote me on that. The exact levels are in the member section, but yeah, I ducked out of that position. I got a lot of hate for that. And then MicroStrategy share price crashed another 50% since then. So, does it have another high in it? Maybe. If Bitcoin is going to continue to run late this year, then I would think for sure it's got another high left in it. But for now, I cover it every week in the members section, and it just continues to look worse and worse and worse. So, the real issue for me is, like I said earlier, if this thing really has topped, or, even if it's got another high in it and then it tops, at some point you can expect this thing to start crashing, especially if Bitcoin enters a bear market. And if that's true, then you could probably expect that some of those bond holders to get jittery and demand their cash back. But Saylor doesn't have the cash, at least not without selling Bitcoin. And I don't think he's going to sell the Bitcoin. So that means the only thing he can do is offer them equity. And then they will dump the equity, because why would you hold it if it's already crashing and Bitcoin's in a bear market? So I think the risk to the downside is a lot more pronounced than many people are willing to entertain. But, you know, time will tell, I guess. Time will tell. For me, the biggest thing, like I said, is I'm aiming at that 2026 4-year cycle low. And if it can not go to zero and not blow up and not get liquidated completely, then I think that will be a very, very nice buying opportunity.
That's the vibe I'm getting to with MicroStrategy is just looking at the chart. It seems like one of the hardest stocks to trade, in my opinion, just because of the volatility. And obviously, there is a much higher delta on MicroStrategy than Bitcoin for like every $1,000 that Bitcoin is moving up or down. Like there's a much higher percentage variance on MicroStrategy, correct?
Yeah, yeah.
And like you were saying, if the equity starts being sold, that's going to signal a faster downside action for MicroStrategy than Bitcoin, like because of that extra like pronounced, human effect of it, right?
Yeah, for sure. And this is also affecting brokers' ability to manage risk and hedge positions, because did you see a week or two ago, Interactive Brokers notified all their clients that they're going to be requiring 50% margin for MicroStrategy holders.
Wow.
So, and that basically means that they're expecting massive volatility, and they're worried that any kind of big moves, whether that's up or to the downside, will cause their clients to get margin called. So they're now demanding they deposit more money for margin so that they can hedge their risk. And it just goes to show that like this instrument is so volatile that it's causing problems for the brokers, right? It's flagging the risk models inside these brokerage accounts. So yeah, man, it's a pretty wild thing to behold.
Did MicroStrategy was it like a 5-to-1 split? I didn't even realize that. I just had remembered seeing their share price was around like 500, and that was like a year or two ago, and then it went all the way up to 1 to 2,000, right?
Yeah, it was a 10-to-1 split.
10-to-1. Okay. Yeah, I saw the price much lower recently, and I was like, there had to be a split, but I wasn't sure the amount that it did.
Yeah, I think it was 10-to-1, and it must have been around $1,200, 1,300 maybe, and then they split it down to 130 ish.
Gotcha. Yeah, and I mean, I definitely can understand the appeal of a split with Nvidia, MicroStrategy, both of those guys just wanting to bring more money in. But yeah, I mean, I don't know, man. I personally don't really like the vibe of MicroStrategy right now, just because of how euphoric it's seen to be recently, and I'm just like, I don't want to go. I guess it's good if you want like a quick hit or something like that, but I don't know. I think it's one of those that, like you said, you find a low, and then you just buy in expecting to hold for either a long time, or you're getting out as soon as you like get a decent profit, basically, if that's the case, hopefully.
Yeah, I mean the chart is pretty damaged at the moment, and that can obviously repair in no time. But as it stands right now, the chart is a little bit damaged, and I think it might have another high in it in the best case scenario, but all paths ultimately lead down into that 4-year cycle low late 2026. And for me, that's what I prefer to do, because if you can just DCA yourself in a position around that time and then sit back, I proved this cycle that works pretty well. And then you can kind of afford to weather some of the dips and the volatility on the way up, because you can aim to 1 to 2 years at least, if not 3, into the future. And yeah, that gives you the time to really kind of take the yield out of the market that way.
Yeah, I haven't even really been thinking about the next cycle that much. And I guess I don't know if that's good or bad, but I at this point didn't really think about like, okay, when would be the next bull cycle beyond this? I do think because I'm almost to a point where I'm thinking I don't even know if I want to sell things anymore, like just because I like to buy and hold almost. But I think that's a sign of getting more maturity in the market. But I do you have any? I know you said like if we don't see I mean, obviously we didn't have a left translated, and that makes the next cycle even more likely of a left translated. I mean, the way the economy has been over the past 3, 4, 5 years, it's just hard to even think that far into the future for me, because I feel like things are so just there's so many possibilities and variances compared to, like, if you look at 2010 to 2020, it was just up and to the right almost. And whereas, like, we had euphoria, but now it's like there's so much uncertainty with the world economy.
Yeah, for sure. Yeah, it's definitely really tough. The whole unemployment, all that data is just fake every day. uh, yeah, it's really hard. It's really hard, and everyone's got completely different ideas, and no one really knows who's right and who's wrong at this stage. And there's loads of wild cards, so many wild cards hanging overhead, and you don't know how many of them are going to come to fruition, if any. And yeah, it's super difficult, but that's kind of why I just focus on the charts most of the time. That's kind of why I like the cycles. The cycles give you this kind of blueprint to follow. And other than that, I do like I do think it's worth aiming at these major 4-year cycle lows. Like, for example, I just mentioned the Microstrategy and Bitcoin 4-year cycle low late 2026. I think it's good to have that in the back of your mind so that you're kind of prepared that once we get towards that date, you can start looking into DCA into some positions and put the balance of probabilities in your favor. But yeah, generally speaking, I think it's just like a one day at a time, right? And we can always sit around and say, what if, what if, what if, what if the end of the world, what if some kind of war breaks out, but blah, blah, blah. But until it actually happens, then it kind of doesn't matter, right? It's kind of just like, let the cycles do the cycle things, and we'll just try and stay on trend as best we can.
Yeah, I think one thing that kind of relates to that, what we just talked about with the world economies, is I know you've been very bullish on gold. Um, for anyone who hasn't heard your theories, and I think I somewhat know just in general that you're bullish on gold, but gold and Tesla have been like two of the best performing things for me over the past year that are, not crypto. But could you give me a rundown on, like, why you're so bullish on gold, and, like, what's the kind of timeline that you're looking at for that bullishness?
I mean, from a technical perspective alone, we formed an 8-year cycle low a couple of years ago, and we are
Mhm.
earning that 8-year cycle. And gold tends to do this thing where, like, it rallies strongly in pretty much up only mode for a while, and then it consolidates and trades sideways for 10, 15 years. And then it breaks out and it runs again very, very hard and strong. And then it consolidates and wastes a decade and a half. And we just so happen to have already completed a 13-year consolidation, I think. And in the last couple of years, we've been rallying, and I believe that that's going to continue. So, just from a technical perspective, we're early in an 8-year cycle. We've already spent 13 years consolidating the move prior, and I think we're ready to move up. And then on top of that, we've also got central banks buying record quantities of gold every year for the past 4 or 5 years. So, that to me says that we should pay attention. That says to me that they've got a plan. I know a lot of Bitcoiners and crypto guys are very quick to, say, oh, Bitcoin's going to demonetize gold and blah, blah, blah. But I often say this, I don't think the central banks are just going to throw that stuff in the sea, right? I don't
Mhm.
believe they're just buying record quantities of gold and then they're just going to wake up one day and go, well, we got Bitcoin now, so let's just chuck this in the ocean, right? Who cares? I just don't believe, they would be buying it if they didn't have a place for it in the future. So there's that as well. I also believe that the gold is probably the way to fix the debt. And I know people love to kind of daydream about Bitcoin perhaps being the thing that they use to plug the
Yeah.
US debt with. And in theory, it could work, right? They could print a bunch of money, print a bunch of dollars, buy Bitcoin with it, print a bunch more dollars, buy Bitcoin with it, and then say, okay, now we've got all these assets, we can plug the holes in our massive ever-growing debt. But realistically, they're probably not going to do that because they can already do that with gold, right? So I just kind of think if we're lucky, Bitcoin makes it into a basket with gold and a bunch of other stuff. And again, I can't get away from the fact that the central banks keep buying gold. I don't believe they're going to throw it in the ocean. So there's all of this kind of culminating in the idea that I think we're probably going to be moving towards some kind of gold-backed system or a basket of commodities. Maybe Bitcoin's in there, but I think gold's going to play a part. I think it's their plan to fix the debt issue with gold. And in order to do that, they have to reprice it significantly higher. And then, like I said earlier, couple all that with the fact we're early in an 8-year cycle. We've done the decade and a half of consolidation. I think it's party time. I think it's party time. I think by 2030, we're going to be trading toward 10K an ounce.
No
And
way.
yeah, I really do. And I actually think that we're probably going to be closer to 20K by 2035.
Wow.
Yeah, seems insane. But believe it or not, those are quite conservative targets. I know there's a bunch of people out there, well, not a bunch, but there's a few out there that are targeting 40 or 42K per ounce. And if you balance the total M2 supply to M2 money supply with gold, then it comes out of 42K. So maybe my 10K will prove to be conservative, but I'm very, very confident we are going to hit 10K in the next 10 years. And I would speculate we're probably going to hit it within 5.
Yeah. Man, I feel like I'm learning so much, dude. I know you touched on M2. Okay, so I didn't know if I was going to be able to work this in because, all right, so obviously I'm learning from you. Can you kind of explain to me when people say M1, M2 money supply, what does that mean, and what's the difference with those two terms?
So M2, oh my goodness, you're really putting me on the spot
Sorry,
here.
this is like out of the blue, but yeah, just I know if it's too much, just let me know.
Well, okay. So M1 is they're all measures of money supply, right?
Uh-huh.
And then as far as I'm aware, and again, I'm not an expert by any means, but M1 is like currency and deposits, right? And then M2 is all of M1 plus savings accounts, money market accounts, retail, that kind of thing.
Okay. Gotcha.
So it's just a measure of, I've probably butchered this, but it's a measure of the total money in circulation, or like the total money supply, if you like.
Okay. Yeah. So M1 is like the first layer of money, and then M2 is like what's not moving around necessarily, potentially. It's just more in accounts that's,
Yeah, it's
holding still
M1.
for the most point.
It's all of M1, the base layer, plus money market funds, retail mutual funds, that kind of thing.
Awesome. Yeah, I have seen some interesting charts looking at the cycles compared to M2. And I think that's one of the most underrated things to look at is the M2 money supply compared to cycle tops, things like that, because it does seem to correlate quite often from what I've seen.
Yeah, I think Bitcoin does particularly well at this because of its hard cap supply, and that most of it's already out there and locked down, right? Like something like 70% of it is held by long-term holders that seemingly either lost their coins or are never going to move them. So I think that definitely helps, because then when you start to print money, the Bitcoiners who know all about that are kind of like, yep, this is what we're here for. That's why I hold my Bitcoin with my hard cap supply. Because even gold, as good as gold is, right? Like they keep mining more, and the higher the price goes, the more it incentivizes them to allocate capital to go and dig more up from somewhere else. And there is a price. I don't know what that price is, but 10K, 15K, whatever, where that will be high enough for them to start to dive down into the bottom of the ocean and mine it from there, right? And there's a price way, way, way higher where they'll go to the moon to try to mine it off of the moon. so yeah, the higher the price goes, the more gold they're going to try and dig up, right? And the more they're going to be able to find. And whilst it is finite, it still has an inflation rate which is above Bitcoin's. And I think that's why Bitcoin does so well, because the moment they start to increase base layer money, whether it's M1, M2, both, whatever, Bitcoin responds to that like a black hole for liquidity.
Hmm. It's actually not that far-fetched to me to think about us going to the moon to mine for gold. Like, is that crazy to say? Like, I could totally see that being a thing in the next 20 years or so.
Yeah, for sure. I completely agree. I just think the gold price needs to be high enough to justify it, right?
Right.
Like if we're suddenly at 40K an ounce, then they can justify putting all that money away and then going to grab it from the moon. But can they justify that capital expenditure for a 3K ounce? Probably not, right?
Hmm. It's definitely easy to see that appeal of gold. I feel like, again, I've learned so much, and it's funny because just in some of the circles where I am with my coworkers and colleagues and stuff, is they're like, oh yeah, Chris is the crypto guy, like he knows about all that stuff. You need to holler at him, blah blah blah. But then like I come talk to you, and I'm like, I'm obviously not capable of explaining M1 and 2 money supply until you told me, and all these types of things. And I didn't know that gold even operated in cycles. Like you educated me on that too. So, but tell me this, like you were still not selling a course, like that's correct?
No, I don't know.
Okay. And I've always been curious because if you can help educate people financially? Like what, I know you said like it's just not your thing and you don't necessarily agree with it. Can you explain that a little bit?
I mean, I've got a tutorial playlist which has, I think, 5 or 7 videos in it,
Yeah.
and that's there for free on YouTube.
Hmm.
And I tune in every day and try to show people what it looks like to be a trader.
Hmm.
Um, and that is essentially for free too. I mean, I get like ad rev from the channel or whatever.
Yeah. Yeah.
But yeah, I don't. To be honest, I don't really want to build a course. It feels, for a number of reasons. One, I don't really have the time. Two, it's not something I really care that much about. Three, it feels kind of weird to be like, oh, I'm a trader, by the way, and come and buy my course. That just feels kind of weird. I think a lot of the traders that sell courses probably make more money selling courses than they do trading.
Of course.
Yeah,
Way better margins usually.
yeah. And I just don't know. Like the absolute truth is, what I do is very, very simple. I don't think it needs a course, right? If you really think about it, my TA is trend lines and cycles, and there's a tutorial on how the cycles work. So you can go and, if anyone wants to go and see how that works, it's a 20-minute video, and then you'll know about cycles. And all that really is understanding that a couple of, there's a handful of assets I show, and they all have slightly different counts. So you just need to know that the stocks is 40 days, Bitcoin is 60 days, gold is about 25 days, right? The Dixie is about 25 days. That's all you really need to know. And then so long as you can count, you can identify the cycle lows, right? You just have to label a low and then count into the future and label that low. And then all I do is draw a trend line and wait for that, to break out. And that's my confirmation signal. So I don't think you need a course for that. But the reality is I could easily build a course and I could make it really complicated and try to show people like, yeah, here's how you be a technical analyst wizard and all of that kind of thing. But the absolute truth of the matter is, and what I try to preach on my channel all the time, is you have to learn to manage risk, right? If you're going to be a trader, you're not really a trader, you're a risk manager. And so you don't need a course for that. What you need is discipline. And it's just the same as the majority of the population cannot find the discipline or doesn't have the discipline to eat a balanced diet, right? They don't have the discipline to show up to the gym 5 days a week. And the same is true for managing risk. The majority of the population doesn't have the discipline to never violate a risk management strategy. And that really is all trading is, right? If you can just say to yourself, okay, I'm going to implement a risk management strategy and I'm never going to break the rules, you will be profitable over the long term. But the really ugly truth of the matter is, almost everyone that shows up to markets and calls themselves a trader or an investor or whatever, they can't help themselves. They can't help themselves but shove all in every once in a while. And that's the reason that they don't make it. It's just because they can't help themselves but shove all in. And so, yeah, that's really all there is to it. I don't think I could actually add any value in terms of a course, because all I have to say is count the days to the cycle lows, draw a trend line and confirm the cycle lows in when it breaks out, and manage the risk, right? Be disciplined.
Mm-hmm.
Don't bet the farm ever, ever. That's all it is. So I don't think I could really justify being like, yeah, give me $500 for my course when that's all I have to say. That's literally all I have to say. And you can tune in every day and watch me do this, and that's it.
It's so funny you say that. I feel like now that when you were putting it together before you said the stuff about the diet, I was like, okay, so the way that you see trading is basically the way I see fitness. So like when I was posting on X a while ago, it's like I started making a lot of fitness content, and after a while I was like, dude, I don't know how many times I can say the same thing. It's like, this is just all you do. Like you do like these 2 to 3 things and you just do it every day, and then you have your result, and it just takes time. And it's so funny that like so many of the principles of success are correlated to different things. But yeah, I'm helping a few guys for like a very low amount, and I have like a very low ticket course just on like fitness stuff. But again, like you said, it just comes down to like the accountability and the discipline. And I think that's a realization I've had over the past year or two, is like, if you don't have something in life that you want, it's because you have not developed the discipline to go get it. Like the discipline is how you get it. And like sticking with that for a long enough period of time to make it happen. So I think you see trading the same way, where it's like, I can only tell you what to do, like, or I can only give you the information. It's very simple to understand the principles and the concept. It all that matters is that you actually do it. And it's the same exact thing with fitness. I'm like, it's really not, the information isn't crazy. It's the working with someone to help make sure that they do it. Like that's what they're paying for basically.
Yeah, yeah. And discipline beats everything. Consistency and discipline beats everything. And me and my wife always joke about this, right? It's like a lot of people are like, oh, I struggle to lose weight, or I struggle to do this, I struggle to do that. But then they don't come out and be honest with themselves and everyone else and say, I struggle to lose weight because I don't have the discipline. What they say is, I struggle to lose weight. And then they insert some excuse, like because I'm big boned or whatever. And you're like, it's not that complicated, right? Eat less, train more. You can't, if you do those two things consistently, you can't possibly gain weight, right? You can't, you just can't. That's just not how it works. And it's the same with trading, right? It's exactly the same with trading. Like if you always manage risk and you never go all in and you never break your rules and you just do the same boring stuff over and over again consistently, you'll be profitable, right? But the one thing that people always get wrong is, like I said earlier, they can't help but shove all in. And so I know you said about like you got a fitness course, and there's probably some value there, right? Because if somebody has no idea like how to count calories and figure out like what's, you know, the right type of foods and a nice workout routine and that kind of thing, then there's definitely some value there to kind of learn that. But at the same time, as I'm sure you're aware, you could give somebody that course, and if they just decide to go, okay, I'm going to read that later, and I'm gonna order pizza tonight and drink 5 beers, right?
Mhm.
They're obviously not going to achieve anything, right? And that's exactly the same with trading. It's like if I give you a risk management strategy, which is free, by the way, in the playlist on my channel, that's all you have to do. Click on that and implement it, and you'll be profitable. But the majority of people will do that and then make excuses. They're like, oh, okay, I get that. Yeah, I'll never bet more than 2% on a single trade. And then the very next trade they make, they're shoving like 30% of their account at risk on some altcoin, and they don't even know why, right? Just because somebody tweeted about it, or they watched a YouTube video and this YouTuber said it was going to go up, and then they go, oh yeah, this whole thing's rigged, or like, oh yeah, this is harder than I thought. It's like it's not. It's discipline and skill is two kind of completely separate things, right? But yeah, man, it is what it is. I guess it's just unfortunate, but I think momentum is key in both fitness and, I mean, I'm sure you probably agree, in both fitness, but in trading as well. Like if you, I often say to the members in the members section that if you struggle with managing risk, set yourself a target for your next 7 trades to be proper risk management, right? And if you can do 7, then you can do 10. If you can do 10, you can do 20. If you can do 20, you can do 6 months, right? And if you can do 6 months, you can do a year. And by then, now you've had a profitable year. And now it's really obvious why you should never break the rules. And I find the same with fitness as well. It's like, I really, really, really struggle to go to the gym if I haven't been in a month. But if I've been 3 or 4 or 5 times a week for the last 5 weeks, then it's really easy for me to roll out of bed tomorrow and go to the gym, you know? And I think that momentum is really, really key.
Yeah, the reason I made that is to eventually, I mean, use it to make money, of course, but I basically struggled with fitness for 20 years or so because, you know, I was like, I want to get a six pack and I never knew what to do. But then after I basically got one of the scans, it showed me what my body fat percentage was. And I was like, oh, all I have to do is drop my body fat percentage down. And so I implemented a system and it took me less than a month once I knew that. And so I had all these principles in my mind developed over the past 20 years of, you know, you get one piece of information here, one piece of information there. And it seems easy in hindsight. And obviously now I know the process, but I never knew for myself what to do because I had conflicting information from a lot of different people. So I was like, dude, all I have to do is make this and I can help people. And I've had a handful of people that have gone through it and said that it's helped them a lot. So I charged a few people because I have noticed with a lot of things, if you don't pay money for it, even if it's very small, like the amount of willingness to keep it going, like it's so easy to fall off or just stop caring if there's nothing on the line basically. So I was like, look, just throw me something. That way it's like there's more skin in the game and a little bit more desire for you to stick with it. So but yeah, I mean, all these principles, It's crazy, man. I feel like I'm so glad we did this because it's helped me gain such a good perspective on trading. Because if I can understand fitness and I can apply those same concepts to trading, it's just comes down to like your desire for short-term results is the thing that's going to keep you from being successful. And like that's the principle that has been resonated with me over the past few years of my life. And when I started actually focusing on long-term things, that's when I started seeing results in a lot more aspects, which is crazy. It's like stop trying so hard to get everything overnight, and then things actually start happening for you.
Yeah, and I think it's also important it's true of both fitness and of trading that if it was easy to get a six pack, right, and anyone could do it, then it wouldn't be valuable, right? And the same is true of trading. If it was like easy to be a trader, then everyone would be a trader and like whatever. But the fact that it's hard and requires discipline and requires you like to focus on your diet and to work out multiple times a week, right? Even when you don't want to, you have to kind of like, show up to the gym and or go running or whatever. Like a lot of the times, like I really don't want to go. But you got to do it anyway. And doing it anyway yields the results. And then people look at the results and go, oh, wow, that's awesome. But it's only awesome because it's hard, right? If it was easy to get a six pack, everyone would have a six pack. No one would care. So the six pack is not really about the six pack. It's about the discipline. It shows that you have the discipline to do what other people are unwilling to do. And it's the same for trading. Like everyone wants to be a multi-millionaire trader, right? Sure. Everyone wants to just basically do nothing, sit around, buy some stock, let it go up. Oh, now I'm rich. I'm gonna buy a Lambo. That sounds really cool, right? But no one wants to. I always say, everyone wants to be a trader, but no one wants to do trader shit, right?
Yeah.
And that's true. Nobody wants to do the trader shit because the trader shit is so boring, right? You have to just sit here all day, trade the same silly system over and over again. You're gonna get stopped out a bunch of times. Some of them are gonna win, and you're going to regularly be saying to yourself, oh, I should have gone bigger there because that one won. Or you're like, oh, maybe I shouldn't have done this or whatever, blah, blah, blah. But the reality is it's very, very mundane, right? It's like I count the days till the cycle low, I buy the breakout and I apply risk management. And over time, that gives me an edge and that allows my account to grow. But it's not glamorous, right? It's not glamorous at all. But it is really hard. And you can see how hard it is because people just cannot resist the temptation to shove 30% of their account in, especially after they win a few trades. They're like, oh, I've got this sussed, right? I know what I'm doing. Time to bet bigger. Or even worse than that, you lose 3 or 4 trades in a row and you go, well, now I got to win it back. So now it's time to double down, triple down, quadruple down. And then that's how you end up, blowing your account up. We've all done it.
Oh, yeah.
I've done it. Right? Yep. We've all done it. But again, it's like a discipline thing. The reason the six pack or being a trader is valuable is because it's hard. And if it was easy, everyone would have it and no one would care.
And the last thing I'll say with that is it's the same thing for me. I'm like, the main misconception I see everyone think is like, I have to work out in order to get this fitness result. Like the harder I work out, the better my fitness result will be. And that's true to a degree. But I'm in the camp that I believe it's 80% diet, 20% exercise, because the times where I've actually gotten the most fit are when I've actually sat down and counted my calories out with an app or like on a piece of paper. So it equates to trading in the sense that everyone wants to put in their 5K in their account and just like put in an option for something for a call and be like, I'm about to go all in. Like I'm going to hit it big, make 100K, and then I'll be good for the year. Like that's the ideal situation, but it's not that. It's the writing your trades out on a piece of paper. And I still have not done this as a paper. Actually, I did make a paper trading account. I forgot about it. And it literally like 3X or 4X or something. Cause I finally paper traded and then stopped caring about it. And I was like, oh, so if I just apply that concept to my actual trading, then it'd probably do much better than me trying to micromanage it. But anyway, it was saying that to actually write your stuff down and be like, okay, I have $5,000. What if I put, 500 or 100, whatever your risk amount is, I guess 250 would be a better risk management. Nobody wants to sit there and analyze what would that be, 100 different stocks or 50 different stocks, something like that, to figure out what are all the different ones you need to buy and risk management. That seems a lot less sexy than going in and just saying, I want to put 5,000 on black or red and walk away, basically. So it really is the same exact concept. It's so funny.
Yeah, for sure. And I think another principle I kind of preach a lot is many people kind of show up and the first thing they're thinking is, how much do I stand to make in a trade, right? So if I say, oh, I think here's a cycle low for whatever the asset is, I'm going to go long if it breaks out and confirms. A lot of people will be like, okay, Camel's getting ready to go long. And the first thought is, if I put X amount in, how much can I make? Right? But the way you want to think about it is, you want to put the risk first. Like whenever I'm taking a trade, I'm like, okay, if I'm wrong, how much am I going to lose? Right. And the moment nobody wants to do that because everyone wants to say to themselves, oh, if it just goes from here to here, then I can buy a Lamborghini. Right. That's sexy. I'm just going to throw some money in, get a Lambo, all those hoes, all of that stuff. Right. But the reality is, no one wants to approach this thing like a professional. No one wants to step in and go, how much am I going to lose if I'm wrong about this? Right. But if you can do that, if you can have the discipline, then you can actually be a pro trader. So it's very, very simple concepts. It's all discipline. Like you say, it's very similar overlaps with the fitness industry.
It's funny, man. Dude, okay, so now action item for me. I want to go watch this playlist again because I remember watching your video and that was a game changer for me to be like, oh, I don't need to buy a 5K course. I can just watch this, and this is actually much easier to understand and follow. So can you send me that link? I'll find it on your channel. I can, but if you'll send me the link either way, I'll put that as the pinned comment. So anybody who watches us on YouTube can go find that. And basically I'll just say, just go watch this playlist. Like, this is going to tell you everything you need to know. Like, I can talk you through it, but this is going to teach you way more, basically.
Yeah, sure. I'll give you the link. And yeah, it's just, if you just go on my channel, click playlist, it's right there.
Okay. Yeah. I figured it'd be easy to find.
Yeah. But yeah, I can send you a link anyway, if you want to pin it or something. And then, yeah, there's like a tutorial on cycles. I think there's a couple of other ones, but the only one you need is risk management, right? The cycles is my preferred strategy, but you don't have to use cycles. You can use MA crosses or like whatever your strategy is. You can trade head and shoulders. It doesn't matter. As long as you have the risk managed, then that's all you really need. But the funny thing is, I never see anyone else talking about it online ever.
Yeah, it was very different. And that's what got me attracted to your channel for sure at the beginning. I think listening to this podcast today, my basically insights were, I probably will buy a little bit more of probably one, maybe two altcoins here and there, but for the most part, it's stop overthinking it, buy more Bitcoin, buy more gold, and be patient, and like that is, and learn risk management and like be disciplined. Those are the insights that I've gathered today from our podcast, man. And I think it'll be interesting to see how the next kind of year goes for us. So kind of what should we be expecting from Camel over the next 6 months to a year?
The same stuff over and over again, because that's what I do, right? Very boring, but it's disciplined. I'm going to show up every day and I'm going to make YouTube videos, same as I always do. And I'm going to do my absolute best to ride this Bitcoin trend until the top. I'm going to do my best to sell the top or as close to it as physically possible in trading. And I'm going to be targeting that 2026 4-year cycle low for both Bitcoin, MicroStrategy, a whole heap of other crypto stocks. And in the meantime, we're going to see if we can sell a stock market top as well. And yeah, that's pretty much it. You know, same boring stuff over and over again. I'm going to keep calling my positions out ahead of time. I'm going to keep showing you where my stop losses are and having public invalidation levels. So if I'm wrong on a trade, everyone will see it, and I'm going to have to hold my hands up and admit it. And I'm going to continue to try to uphold a higher standard of YouTube and finfluencer type channels. I'm going to try to show that there's a reason a lot of these channels don't show their positions and call them out ahead of time, right? There's a reason for that. And that's probably because they want to sell you a course rather than show you how to trade. So yeah, I'm just going to keep doing me, keep having fun. And hopefully we can get to the end of this year, find a nice, much higher Bitcoin price to sell at. And then, then it'll be bear market time and we can chill out for a bit.
Nice. Yeah, dude. I love this, man. And I'll be like a little camel prodigy that's learning how to be a disciplined trader and to start applying those concepts to actual trading. And I think I've come a long way in the past 4 years. So I finally am getting to the point where I'm like, dude, just long term, just think long term. And that's how you operate every day. It's a good way to live life.
Yeah, for sure. And I think a lot of people want to overwork and get too involved with their trades and stuff, but there is definitely something to be said for sitting back and letting the trade work for you, you know?
100%, man. Dude, I really enjoyed this conversation today, man. Thank you so much for making time.
No problem. Thank you very much for having me. And if you want to do it again, let me know.
For sure, bro. For sure. And take care and have a great rest of the winter out there.
Cheers, Chris. Yeah, you too, mate.
All right, sounds good, Cam. We'll talk soon.
Okay, we'll do. Cheers. Bye.